Hello everyone, this is Gary Raze of RE/MAX Integrity here in Lane County, your Lane County Realtor. I'm interviewing here Tim Tyler of Residential Mortgage Company, and I'm thrilled because he's coming here to talk a little bit about some of the questions that I've been receiving lately. And of course, that's all about real estate, where the market is going, and where the interest rates are going. So first of all, I'll talk real briefly about the real estate market itself. We're experiencing a slight slowdown in purchasing and selling, but we haven't noticed much difference in prices of late. So the median price right now in Eugene and Springfield is close to $540,000. So that's quite the rise of a few years back. The interest rates, though, Tim, I'm going to go ahead and refer to you on that because I know you're experiencing on a day-by-day basis how that mortgage thing is hopping up and down. So can you tell our listeners what's happening today?
Sure, yeah. What time is it? I think they just changed a minute
right.
ago. Yeah, I know they are ever changing. They did improve just a little bit the other day after the CPI numbers came out. So they did improve a little bit on that. But we're talking about rates that are in the mid sixes for a 30-year fixed rate mortgage. A little bit better than that with a VA or a FHA type.
Well, that's a little better than I expect. I expected you to say close to 7, to be honest. So things have adjusted a little bit. And the other thing that I think people need to realize too is we're really not much higher than the 30-year average, are we?
That's correct.
So many
that's
years,
exactly right.
It was like 6.5%, 7% forever, and then we got spoiled the last 4 months.
We did. Yes,
4
we
years,
did.
I mean, yes. So where do you foresee the future in the mortgage industry? Where is it? Interest rates going to go up or down?
Well, rates are going to trend down. Historically, they follow the pattern of inflation. So as the inflation numbers start abating, interest rates will start going that trajectory too, downward. Now, they go up a lot faster than they come down. So it's going to be a gradual move.
So here's my fear. If we wait too long for interest rates to maybe go down and the prices continue to rise, the buyer is probably, and the seller is probably better to just get it done now as opposed to waiting 9 months for a future that we don't understand, but we do know what's happening today. Would you agree with that?
I would agree with that. I think you want to make the decisions on what you know today, because like you said, there's no way of knowing for sure or for any certainty that what's going to be in the future. And I would also agree with you that home prices are going up, and it's pretty much inventory driven, right? So as home prices keep going up, when interest rates go down, if the interest rates come down into the 5s, that's going to heat up the market again. There's going to be more competing offers. And
one other thing, let's pretend that the interest rates either stay steady or go up a little bit. What can the purchaser do to help their cause?
Sure. No, that's a very, very good question. So there's a couple ways you can do it. You can do what's called a temporary buy down.
Okay.
So what that does is it lowers the interest rate for, let's say, a 2-year term. A 2-for-1 buy down would be, the interest rate would be a couple points lower than it is now for the first year, 1 point lower in the next year, and then it would catch up and be at that regular rate.
And of course,
forward.
When Tim talks about points, he means like a full point of interest rate. So if I'm hearing you correctly, a person could theoretically do a 5% mortgage, and then a few years later, they could, you would buy that down immediately to a 5%, especially if you're going to be there a while, and then you can adjust later as or if the interest rates change down the road.
Yeah, if just taking really easy numbers, say a 7% starting rate, because 7 is what you kind of thought they were. So start at 7. So a buyer could get a 2-1 buy down and start that rate at 5% in the first year, 6% in the second year, and then 7% would be the rate for the third year and beyond.
Okay.
Until they refinance out of it.
So there's lots of options still available for our buyers.
There are, and there's permanent buy downs also,
Okay.
which I've done the math on both. And a lot of times what will happen is if it's a, if it's a buyer paid buy down, which is a permanent buy down, then it doesn't buy down to 5.
No, it would not.
It takes a lot of points, right? A lot of discount points, a lot of buy down points in order to get the rate down that low. But you could actually pay a couple of discount points or 2.5 discount points and get that rate down pretty low.
Okay. As a matter of fact, as a buyer, if you would ask your agent perhaps to in the agreement that you're purchasing that the seller pays part of your buy down. That's another option that could be available to you. So anyway,
correct.
Tim, thank you for a quick share of today's market, and
yes, absolutely.
we'll continue this down the road and try to keep our clients informed as things happen.
Absolutely. Be the local experts.
So how do they get a hold of you?
Yes, I mean, my contact information, you can either call me, 541-556-4134. My office is located at 678 Country Club Road here
Pacific
in Eugene.
Residential Mortgage.
Correct.
Right. And if you need to get a hold of me, Gary Raze, Remax Integrity, simply give me a call. You know my number, 541-554-5825, or just go to my website, lanecountylistings.com. So until next time, we'll talk soon.